Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Friday, the 5th of December. I'm Caroline Hepke in London.
And I'm Stephen Carroll in Brussels. Coming up today, after only 8 months in office, Germany's ruling coalition faces a crucial vote that could trigger its demise.
Warner Brothers enters exclusive talks to sell Netflix, its film and TV studios, as well as HBO Max, in what could deliver the ultimate box set deal.
Plus, back on the menu, celebrity chef Jamie Oliver revives his Italian restaurant chain 6 years after its highly publicised collapse.
Let's start with a roundup of our top stories.
Germany's ruling coalition faces a key vote today that could threaten the country's political stability. A group of around 18 lawmakers from the Chancellor Friedrich Merz's own party has rebelled against the government's pension bill, which is due to go to a final ballot at lunchtime today. With more, here's Bloomberg's Chris Pitt.
Although it's unclear how many of Merz's own lawmakers will reject the law, with a coalition majority of just 12, the German leader has little margin for error. A botched vote would highlight the Chancellor's lack of authority over his own caucus and could inflict major damage on the government's ability to pass legislation. It comes as the co-leader of his coalition partner, the SDP, hinted this week that if the pension bill does not make it through, it could spell the end of the coalition. That could potentially lead to a fresh national election at a time when the far-right Alternative for Germany party is in first place in some polls, buoyed by anxiety over the stagnant economy. In London, Bloomberg Radio, Chris Pitt.
Now, Russia's Vladimir Putin has arrived in India for his first state visit since the Kremlin's full-scale invasion of Ukraine. The president was welcomed at the airport by Indian Prime Minister Narendra Modi, showcasing warming ties that have angered the United States. Putin's trip comes after US President Donald Trump imposed tariffs of 50% on Indian goods to punish New Delhi for its close connections with Moscow. Discussions between the leaders during the two-day visit are expected to focus on trade and economic relations.
Warner Brothers Discovery has entered exclusive negotiations to sell its film and TV studios and its HBO Max streaming service to Netflix. According to people familiar with the discussions, Netflix is offering a $5 billion breakup fee if regulators don't approve the deal. A tie-up between the world's dominant paid streaming service and one of Hollywood's oldest and most revered studios has the potential to bring seismic change to the entertainment industry. Sources tell us that if talks go well, a deal could be announced in the coming days.
Jane Street's record results this year have been boosted by its savvy bets on the AI boom. The US quantitative trading giant lifted its third quarter trading revenue by about $830 million, with the surge of Anthropic reported to make up the vast majority of those gains. With more, here's Bloomberg's Freddie Fulston.
Jane Street's investments in Anthropic are beginning to pay off. The AI firm's valuation has more than tripled since the beginning of the year, increasing to $183 billion as of its latest funding round. Jane Street's also benefited from investments in the cloud computing company CoreWeave, in which it holds roughly 7% of outstanding shares. It's put the firm amongst the top Wall Street performers in terms of trading revenue, despite a recent high-profile dispute with India's regulator. In London, Freddie Fulston, Bloomberg Radio.
The Booker Prize-winning author Salman Rushdie has warned that the banning of books in parts of the United States is contributing to unexpected amounts of pressure on free expression around the world. Speaking on the latest episode of Bloomberg's The Michelle Hussein Show, the novelist said it's more important than ever to protect the views we disagree with. Commenting on the book bans, he says he could never have imagined the present culture of censorship in the US.
It's more important than just the fact that this or that title that you happen to be fond of is banned. It's a question of what would happen to a generation of children if they grow up ignorant of the history of the country. That's dangerous.
Dangerous
because it is a very plural society, a very diverse society. And if all you hear is one version, which is the version of the dominant race, then that's potentially very destabilizing.
Salman Rushdie there, who added that according to the advocacy group PEN America, there are currently around 23,000 active book bans in the US. The Department of Education in the country has dismissed criticism of book bans as a false narrative, defending what it sees as, quote, common sense procedures by which to evaluate and remove age inappropriate material.
Well, those are our top stories for you today. Looking at the market, European stock futures pointing to a higher open, just about 0.2 up at the moment, after stocks 600 shares rose 0.5% at the close on Thursday. US stock futures are also in the green. It's been more mixed in Asia. The MSCI Asia Pacific Index did drop as much as 0.7%. It has made back that ground. We get the Fed's preferred inflation gauge today, the personal consumption expenditures index. The dollar has been edging lower in Asia ahead of that. Thursday saw a rise in US Treasury yields. The 10-year yield this morning is flat, trading at 4.1%. Risk sentiment, though, does seem to still be pretty fragile, even as we've seen global stocks rebound somewhat in the past couple of weeks. But that's where we are this Friday.
Well, in a moment, we will bring you more on the looming crisis facing Germany's government, plus why the chef Jamie Oliver's reopening his high street restaurants in the UK. But a different kind of story that we've been reading this morning. The debate's been raging for some time now over whether or not the stock market is in a bubble after the massive gains we've seen in recent months, driven by AI, of course, as well. So our markets columnist Jonathan Levin, along with Taylor Tyson, have been distilling the arguments into the form of a text thread. Makes it very easy to go through some of the key arguments in this area. And there are arguments, we've heard many of them on our own programming as well, covering questions like, are valuations dangerously high? Is it 1999 all over again? Are meme stock investors something to worry about? Conversation is, the way it's framed is great, and it's, I have to say, much more erudite than what's in my phone. If you were to look through it now, there's a few economic thinkers referenced as well. Joseph Schumpeter's The Creative Destruction Being an Essential Fact of Capitalism gets dusted in there at one point as well. But it's a really good, both digestible thread of all of the key points in this argument too, with the key sort of charts and facts that you need to understand where things are in a market that has been pretty exceptional.
Oh, listen, I had to chortle. I mean, it's got the charts that I have seen regularly used and abused by finance folk and others on LinkedIn and Reddit and socials and everywhere else. But yes, it is a really good kind of summary of the fundamental arguments of why some people are concerned about where we are in stock markets, and others are very dismissive and say, actually, no, it's a new era. I like the fact that it ends with the classic "be fearful when others are greedy" quote. But actually, of course, you know, if you look at the 3 years in terms of the kind of bull market and how long it lasts, a lot of people, the naysayers, kind of often call the end of a bull run something like 3 years too early. So, you know, others argue that you should stay
just
in
want
for
to
longer.
be first to be like,
Yes.
oh, no, that's it. It's over now. Anyway, look, it's all the fuel that you need to have an argument about this over the festive dinner table this year. If those are what the people in your family are going to be talking about. You'll find the full story on Bloomberg.com. We'll put a link to it in our podcast show notes as well.
Okay, let's bring you now more on the big political story in Germany. So the ruling coalition led by Friedrich Merz is facing a significant rebellion over a pension bill that's due to go to a final vote in the Bundestag today. Our Germany Deputy Bureau Chief Jenny Tier is with us now for more. Good morning, Jenny. First of all, why is this pension bill proving to be so controversial?
Good morning from Berlin. Yeah, this pension bill is really controversial, not from Merz's coalition partners, the Social Democrats, but from his own party. So there is a young group of conservatives who are really unhappy about this. They feel like this pension bill is not what was agreed on in the coalition contract. And they're really rallying for Merz in his campaign this year. And they're really disappointed about, not and want to hold him accountable for his promises. And so this is why a lot of young conservatives said, okay, now this is something that's really important for us. So it's a rebellion coming from his own party.
How significant are the numbers involved, though? Does this kind of reach the bar that it could actually topple the coalition?
Yeah, I mean, the coalition is a majority of 12 seats. And there are 18 of these young conservatives. So theoretically, they could block this pension bill. But in a kind of surprising turn of events, the Left Party has announced to abstain from the vote. So that would mean that it would be much easier for Merz to secure the majority for this bill. But yeah, I mean, we still have to see. It's up in the air, to be honest.
What happens if the bill doesn't pass? Does that look likely? What happens then?
Yeah, I mean, if the bill doesn't pass, of course, this would mean like a major disruption, like a huge, massive crisis for the German government. I mean, if you take a look at the polls, the far-right party Alternative for Germany is ahead in some polls. And I mean, Merz doesn't want a new election coming up. So, I mean, this would be a catastrophe for Germany, I think. But now with the kind of like poison support from the Left Party, it seems more likely that this bill is going to pass. But still, I mean, if Merz doesn't get a majority on his own, like from his own coalition, it's definitely going to weaken him anyway. So, and he knows that. And in a speech he gave yesterday evening, he asked his parliamentarians to actually support him so they get a majority on their own.
This certainly must be worrying for businesses, though, in Germany, and for this was the perspective of the economy more broadly, that the coalition that's only, as we say, 8 months into its lifetime is already facing this massive test.
Yeah, definitely. I mean, in the beginning, it all looked pretty good for the German economy because even before the government started, Merz announced this special debt finance funds for military and infrastructure worth hundreds of billions of euros. And this is really acknowledged by the market, a lot of money coming into Germany. You could see it on the DAX. It was 20% up this year, but only 2% since the government actually started in May. And now the pressure is definitely rising on Merz's government. And their business leaders actually say, okay, we need structural reforms. It's not enough. You promised a lot. Now, please deliver. And Germany is only supposed to grow. The German economy is only supposed to grow by 1% this year. And I mean, compared to other European economies, that's definitely not enough. So there's a lot of impatience in the business community.
Okay, Jenny, very interesting. Thank you so much for your update and explaining to us the perils then for Friedrich Merz and his coalition. Our Germany Deputy Bureau Chief Jenny Thier speaking to us today. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
In the UK, the chef Jamie Oliver is reviving his chain of Italian restaurants 6 years after it collapsed into insolvency. It's an investment in the high street at a difficult time, though, for the restaurant industry. Our reporter Tiwa Adebayo has more on the story for us. So, Tiwa, Jamie's Italian coming back. What's different this time around?
Yeah, it's back. But for a long time, Stephen, it seems like Jamie's Italian has been something of a relic of an era gone by, you might say. It went into administration in 2019. And of course, it was built on Jamie Oliver's brand as a TV chef, which he started in the 90s. But that's all changed recently. And I don't know if you've ever had to kill time before a flight in Gatwick Airport, but that was for a long time home to the last standing Jamie's Italian. But that's all changing now. It's coming back, maybe with a bang, I'd say, to London's Leicester Square. This time it is a franchise deal with Brava Hospitality Group. So that's the team behind the Prezzo Italian chain, which you might know as well. And Jamie Oliver says he's learned some lessons from the previous failure. Basically, he thinks that the last time his restaurant business went too big too soon. So they opened sites that were perhaps larger than they needed, and that left them quite vulnerable to the decline of the high street and what he's calling the Uberization of food. So this time he's trying to combat that. He's trying to perhaps appeal to a different market here. He's offering things like loyalty programs to attract customers that are looking for affordability, particularly at this time where there are economic headwinds headlines that are making things difficult for a lot of consumers.
Yeah, I mean, sometimes I see parallels, at least in the location choices of Jamie Oliver's old restaurants with Guy Fieri in the US. Anyway, I shall leave it there in terms of the US references. But in terms of what it means for restaurants in the UK, I mean, high costs, a very squeezed consumer. Why is Jamie Oliver then trying to kind of retread what is actually a really difficult hospitality space now?
Yeah, you could definitely question the timing of this project. It's a time of renewed pressure really for the industry as a whole. We talked about those high costs that consumers are facing. It means that they're eating out less. It's going further down the sort of list of priorities for a lot of families. And that's been coupled with the fact that after last week's budget, of course, many restaurants are going to face soaring business rates next year. They're also still dealing with some of the after effects of the previous budget. So things like the higher minimum wage and higher national insurance contributions. But Jamie himself has said, this landscape it's a bit of a horror show, actually, particularly for the mid-market dining sector. And he said that no restaurateur at the moment is really pleased with any of the recent government decisions. So remains to be seen if Jamie's Italian can make a resurgence. We'll keep an eye out.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.